Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AUTONATION INC quarterly report. AutoNation Inc. offers a wide range of automotive products and services through its four segments: domestic, import, premium luxury, and AutoNation Finance. The company's business includes new and used vehicle sales, parts and services, plus automotive repair and maintenance, plus wholesale parts, plus collision services, financial services, plus vehicle financing, plus insurance products, vehicle services and other protection, plus indirect financing for vehicles, other services, plus AutoNation branded collision centers, plus AutoNation USA used vehicle stores, plus automotive auction operations, plus parts distribution centers. AutoNation Inc.'s stock price has seen a significant surge of over 27.86% in the past year, primarily fueled by strong quarterly earnings reports and strategic financial actions. The company's fourth quarter 2024 earnings beat, which exceeded analyst expectations with an adjusted EPS of $4.97 and revenue of $7.21 billion, was a major catalyst for the stock price increase. This trend continued into mid-2025 with another earnings beat in the second quarter, where AutoNation reported an adjusted EPS of $5.46 and revenue of $7 billion. Additionally, positive analyst sentiment and price target upgrades contributed to the stock's rise. Morgan Stanley raised its price target for AutoNation to $200, and the average analyst rating is currently buy, with a potential upside of up to 232.14. While the third quarter earnings report also beat expectations, the stock price declined due to shrinking new vehicle profit margins, highlighting the importance of sustained positive news in driving the stock's increase over the past year. The primary drivers of revenue growth or decline in the automotive retail industry are multifaceted. On the growth side, new vehicle sales, used vehicle retail revenue, finance and insurance gross profit, and parts and service gross profit are key contributors. These factors are influenced by various industry-specific elements, such as changes in economic conditions, manufacturer programs, and reliance on third-party suppliers. However, there are also several drivers of revenue decline, including a shift in the mix to lower-value used vehicles, decrease in same-store new vehicle gross profit (PVR) due to increased average vehicle costs, and decline in dealer and other segment revenue. Additionally, factors such as capital expenditures, acquisitions and divestitures, interest income on auto loans receivable, and industry-specific sensitivities also play a significant role. Overall, the automotive retail industry is highly sensitive to market conditions, making it essential for companies to monitor and adapt to changing circumstances in order to achieve growth or mitigate decline. Net income and profit margins. A mixed picture. The financial performance of a company has shown mixed results in terms of net income and profit margins. For the 3 months ended September 30, 2025, net income increased to $215.1 million from $185.8 million in 2024, indicating an improvement. However, for the 9 months ended September 30, 2025, net income declined to $477 million from $506.1 million in 2024. Profit margins have also fluctuated. The gross profit margin increased slightly to 17.6% in the 3-month period, but decreased to 18% for the 9 months. Operating income margin showed a slight increase of 5.3% in the 3-month period, but declined to 4.5% for the 9 months. The reasons behind these changes are attributed to several factors, including repurchases of common stock and stock-based compensation expense affecting net income, as well as changes in revenue mix, average vehicle costs, and a shift towards hybrid vehicles and electric vehicles impacting profit margins. The company's debt level and interest expenses have undergone some notable changes. While the overall debt level has remained relatively stable, certain types of debt have increased significantly. Long-term debt and non-recourse debt have seen substantial increases, rising from $2,613.6 million to $3,163.9 million and $797.7 million to $1,683.6 million, respectively. Conversely, commercial paper notes outstanding have decreased by $430 million. In terms of interest expenses, there has been a decrease in floorplan interest expense, with reductions of $13 million in the third quarter of 2025 and $24.5 million in the first 9 months of 2025 compared to 2024. Additionally, other interest expense has also decreased by $2.7 million in the first 9 months of 2025 compared to 2024. These changes suggest that while the company's overall debt level may not have changed significantly, there are shifts in specific types of debt and interest expenses that warrant attention. The company's financial performance varied across different segments and regions in 2025 compared to the previous year. Notably, domestic sales saw a significant increase from $1,774.9 million in 2024 to $3,415.6 million in 2025, while premium luxury segment revenue rose by $133.4 million. On the other hand, import sales declined by $126.9 million, and corporate and other segment income was negative at -$43.50. Management's outlook and strategy overview. The company is anticipating a moderate decline in new vehicle unit sales due to increased supply and tariffs. However, they expect consumer demand for hybrid vehicles and electric vehicles to accelerate. To adapt to this shift, the company will focus on improving execution and investing in strategic initiatives, such as expanding its AUTONATION finance business and upgrading facilities. Management also expects a positive impact from certain provisions of the 2025 Budget Reconciliation Act, although the materiality of this impact is uncertain. They plan to continue evaluating estimates and monitoring stores with lower performance for potential impairment. In terms of strategy, the company will prioritize managing liquidity, investing in strategic initiatives, and hedging against interest rate risk. They aim to maintain sufficient liquidity to fund operations for the foreseeable future and may issue debt or securitize auto loans receivable to augment liquidity or reduce cost of capital. The company has made significant acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased a total of 6 stores, including 1 domestic store, 1 import store, and 2 premium luxury stores, each on pages 26 and 64. On the other hand, the company has divested a total of 11 stores, including dispositions of automotive stores, sale of assets or businesses, and business/property dispositions. Specifically, the company has sold 1 domestic store, 1 import store, 7 domestic stores, and 1 import store on pages 31, 39, 64, and other specified dates. The company has a history of share buybacks. Between September 30, 2025 and the previous 9 months, a total of 3,116,618 shares were repurchased for $434.8 million. This indicates that the company has prioritized returning value to shareholders through share buybacks rather than paying dividends. Concerns about inventory buildup and supply chain disruption. The financial summary highlights several points of concern regarding inventory buildup and supply chain disruption. On page 8, it is noted that a decrease in inventory could indicate supply chain issues or changes in demand. Conversely, on pages 12 and 19, an increase in used vehicle and parts and service inventory by 1.4% and 3.7%, respectively, as well as a $129.2 million increase from December 31, 2024 to September 30, 2025, suggests potential issues with supply chain management. Additionally, the introduction of tariffs by the U.S. government on page 38 may limit inventory availability and reduce demand for products and services. Furthermore, the decrease in new vehicle inventory days, supply from 52 days to 47 days on pages 43 and 46, indicates a possible strain on supply chains. These factors combined suggest that there are valid concerns about inventory buildup and supply chain disruption. That concludes the financial summary for AUTONATION INC. Feel free to comment below, and I will be happy to answer them when possible.